Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. So welcome to this podcast episode 119, titled Great ESG Fashion Infrastructure and Clean Energy Stocks and Funds. It's presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information, and resources. And look at my newly revised website at investingforthesoul.com. Tell me what you think. Now remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page located at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, nor do I receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal to you any personal investments I have in the investments mentioned herein. Additionally, quotes about individual companies are brief. Please go to this podcast's web page for links to the actual articles for more company and stock information. Also, some companies might be covered more than once, and there are also 6 article links below that time didn't allow me to review them here. In this podcast, I'm going to cover a few articles with some unusual ESG and sustainable stock recommendations. The first article is titled 3 Sustainable Fashion Stocks Set to Redefine the Industry. It's by Muslim Farooque and found on investorplace.com. Now some quotes from Mr. Farooque. In the realm of the clothing sphere, notorious for its environmental footprint, a transformation is underway. Global brands that are typically part of the problem are now passionately championing the cause of sustainable fashion. First one he's talking about is Tapestry. Is the parent company behind popular luxury brands in Coach, Kate Spade, and Stuart Weitzman. Tapestry's commitment to sustainability is evident in its Fabric of Change ESG strategy, according to its 2022 sustainability report. The company aims to reduce greenhouse gas emissions by 42.5% by 2030, targeting net zero by 2050. Tapestry's social responsibility efforts include aligning executive compensation with equity, inclusion, and diversity goals. These dual focuses on financial performance and sustainability make Tapestry a compelling choice for investors targeting long-term growth and corporate responsibility. 2. PVH, housing popular brands like Calvin Klein and Tommy Hilfiger, is one of the most noteworthy players sustainably and ethically. PVH's forward fashion strategy represents an active transformation. Further, it focuses on climate action, human rights, and diversity, incorporating a comprehensive climate risk scenario analysis. The company has achieved 60% renewable energy usage in its facilities. PVH is deeply invested in social equity by launching a global mentorship program focusing on diversity. This balance of solid financials, marked by impressive profitability metrics and a steadfast commitment to sustainability and diversity, makes PVH a standout in the apparel sphere. And 3 is Lululemon. It is a renowned athletic apparel maker, making remarkable strides in both financial performance and sustainable business practices. Lululemon's shares are soaring in value lately, approaching an all-time peak as it joins the prestigious S&P 500 index. In tandem with its financial achievements, Lululemon is ardently pursuing its impact agenda, committed to sustainability and equitable business operations. The company aims to achieve full diversity and pay equity within the next couple of years. This proves their commitment to the well-being of over 100,000 supply chain workers. Recently, it pledged a $75 million investment towards global social impact by 2025, while setting ambitious targets. The first is ensuring 100% sustainable materials in their products by 2030 and achieving 75% by 2025. Moreover, it is committing to reducing carbon emissions in its supply chain by 60% by 2030. Therefore, its dual focus on solid financial growth and impactful sustainability initiatives positions Lululemon as a leader in both the business and environmental spheres." End quotes. Now, many investors will consider infrastructure stocks in their portfolios. So this article caught my attention. It's titled, "3 Infrastructure Stocks to Buy as They Build the Future." The author is Noah Bolton and found on NASDAQ.com. Here are some quotes from the article. 1. Fluor is a construction company based in Irving, Texas. They engage in energy markets, including decarbonization, renewable fuels, and nuclear power. They also serve the oil and gas industries and provide management services for the industrial, information technology, and healthcare industries. Year to date, their share price has risen 12%. They are a solid infrastructure company with strong fundamentals and having multiple segments of its business offers diversification within one company. 2. Limbach Holdings is a building solutions business based in Warrendale, Pennsylvania. They design, fabricate, install, and provide maintenance for electrical, plumbing, and HVAC systems. Limbach Holdings services hospitals, colleges, laboratories, and other facilities. Over the past year, their share price has increased 300%. They have a robust balance sheet which still offers investors projected growth. And 3 is Seco Environmental, located in Dallas, Texas, is a pollution reduction company in industrial air quality and water treatment. Seco designs and manufactures flow control products, expansion joints, dust collectors, filtration systems, and other water treatment technology. Seco Environmental has had a great year so far and a 78% growth in their stock price within the last year. It's a great pick for investors looking for companies helping to reduce the effects of climate change and pollution. End quotes. Now, it's been a while since I had an article on renewable energy funds, and this one comes from a highly regarded source. It's titled, 10 Clean Energy Funds to Freshen Up Your Portfolio by Elisa Stankiewicz on Morningstar.com. Here's some of what Ms. Stankiewicz says. These funds are well regarded by Morningstar's analysts and deliver high exposure to climate impact. They are Calvert Global Energy Solutions, JP Morgan Sustainable Infrastructure ETF, Spider SPDR Kensho Clean Power ETF, GMO Climate Change, JP Morgan Climate Change Solutions ETF, Xtrackers US Green Infrastructure Select Equity ETF, Guinness Atkinson Alternative Energy, IQ Cleaner Transport ETF, Goldman Sachs Bloomberg Clean Energy ETF, and the Van Eck Green Infrastructure ETF. End quotes. And back to a sector that's top of mind for ethical and sustainable investors with this article titled Unlocking Incredible Solar Energy Potential, 3 Stocks to Invest in Now. It's by Chandler Capital and found on investorplace.com. While large giants like Tesla and NextEra Energy have begun paving the way in renewable energy, in this article we wanted to highlight 3 more hidden gems with the potential to be the next dominant leader in the solar energy space. One is Enphase Energy, is the world's leading supplier of game-changing microinverter technology, with 765 patents globally and a customer base across over 145 different countries. Enphase Energy finds itself ahead of the competition in solar innovation. In fact, Yahoo Finance analysts estimate it will trade around at a 1-year price average of $116.09. 2. First Solar is one of the leading providers of solar panels and utility-scale power scales as the company continues to pave the next generation of solar technology. Yahoo Finance analysts estimate it will trade within a 1-year price range of $157.56 to $326, averaging at around $232.34. 3 is Ortus Power, is a prominent player in the energy sector, contributing to the shift to solar energy through managing commercial and community-wide solar facilities. Ortus Power just recently revealed its new Ortus IQ, an AI-powered cloud-based tool that gives insights on energy usage and generates solar savings. From real-time monitoring and solutions to comprehensive reports and seamless portfolio integration, Ortus IQ will only accelerate Ortus Power's growth. End quotes. Continuing on the renewable energy theme is this post titled, The 3 Most Undervalued Renewable Energy Stocks to Buy, November 2023. It was written by Faisal Homoyan and seen on investorplace.com. Here are some brief comments on each of his picks. These are the undervalued renewable energy stocks to buy for robust returns. First is First Solar, positioned for accelerated growth as new facilities are operational and I expect margin expansion to sustain. 2 is Plug Power. Even with financing challenges coupled with doubts on execution capabilities, Plug stock is deeply oversold. 3rd is Solar Edge. Operating losses are a concern, but there is ample scope for growth in emerging markets in the coming years." End quotes. In this next article, titled 7 Dividend Stocks with Good ESG Scores Will Appeal to Many Investors, is by Jeff Reeves and discovered on money.usnews.com. Some quotes and a table follows on the site. According to the Dow Jones Sustainability World Index, which utilizes S&P Global's ESG scores, the following 7 stocks all are among the top 10% of corporations globally based on ESG scores. They also are all more than $40 billion in market value, showing they can achieve these social goals at scale. The first one is ASML Holding NV, S&P score 82, and dividend yield 1.2%. Next is AstraZeneca plc, ESG score 78, yield 2.3%. Next, Hilton Worldwide Holdings Inc., ESG score 64, yield 0.4%. Microsoft Corp., ESG score 55, yield 0.9%. Next, Toyota Motor Corp., ESG score 43, yield 2.3%. Next is United Health Group, ESG score 65, yield 1.3%. And finally, Visa Inc., ESG score 61, yield 0.8%. Now, for more information on these companies, go to this podcast's webpage and, of course, links to the actual article. Now, some other honorable mentions, not in any particular order. 1. Title: 3 ESG stocks to profit while making a positive impact on investorplace.com by Marie Brodbeck. 2. Title: The Future is Green. 3 must-have renewable energy stocks for 2024 on investorplace.com by Rick Orford. 3. Title: What is Impact Investing and 7 companies that are transforming the future on finextra.com by Shoshana Weisenblatt. 4. Title: 3 alternative energy stocks to power up your profits on investorplace.com by Larry Rama. 5. Title: The Ethical Investor. Buy this kind of mining stock if you love both profit and the environment on stockhead.com.au by Eddie Sonato. 6. Title: 11 Best Halal Dividend Stocks to Buy on Yahoo.com by Vada Gill. Well, these are my top news stories with their stock and fund tips for this podcast titled Great ESG Fashion, Infrastructure and Clean Energy Stocks and Funds. Now, please be sure to click the like and subscribe buttons on Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these so very, very troubled times. Contact me if you have any questions. And thank you for listening. Again, please look at my new, totally revised website at investingforthesoul.com and tell me what you think. Talk to you next on December 15th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.